Hello traders, hello everyone, welcome to our new webinar. We were away yesterday, I was away. Also it was a holiday in the US. So I will give you some fresh updates today. Just let me know if you can hear my voice. Is it too loud maybe? So if everything is fine, we will start in a second. So NS is here. So everything is fine. Okay, thank you. Before we begin, just let me remind you that the US stocks beta version that has been for free to everyone has now been closed. So if you are interested to get more of updates on those US single stocks, I welcome you to check our plan section, and then you decides whatever you want to go into our premium services or no. But of course I will as always give you some free fresh updates through the week while I'm tracking we are tracking different markets, and we'll also provide some of the analysis of those stocks in today's webinar. So what's happening? As you know, the most important thing is has been basically last week. Inflation came down to 2.4%. Jobs were strong. The unemployment rate also came down. So now everyone is wondering if maybe Fed will be looking to further cuts because inflation is softening. Keep in mind that we are still away from their 2% target, and their primary goal is actually to stimulate the economy if the economic conditions would worsen. But if jobs, labor market is still doing fine, that there is no reason to lower the interest rates in my opinion, and they're still far away from their 2% target. Keep in mind that if they will lower rates too much, we can easily go back to 2.6%. So in my opinion, they will most likely maybe make another cut, but then they will be on hold. And that's what can also, that's also one of the reasons why we are seeing move to the downside on stocks since last Wednesday. So before we go to some other charts, of course, I always want to start with the dollar index. And as you know, dollar index, in my opinion, here's better look. I still think that we are closely to completion. Maybe already we completed this impulsive drop, or this drop down from that January high. So that was a very nice 1 year of a downtrend, and now I would not be surprised to see a stabilization. We were looking for another push to the downside since the beginning of the year, and this happened. Now the question is if this wave 5 has already bottomed or now. We definitely have seen a pretty nice push to the upside so far, and I'm just wondering if maybe this recovery, the first leg from that new low, is already suggesting that we are basically trying to bottom here, because you can see here that that was a very strong recovery. Yes, we stopped at this previous resistance around 98, and this drop was also very strong. So it's a bit tricky situation, I must admit, and looks like that we could stay a bit neutral here. But in the near term, watch out maybe for another push to the downside into the 61.8%, maybe the 78.6%, so 96.20 or 40 or so. This could be quite important zone for potential stabilization. We will see what will happen down there. If, let's say, these levels will just be smashed out pretty strong, then in my opinion we should be aware of another low. But still, then I would be looking for a final low around 95. So bottom line, my assumption is here that we are in a very late stages of this downtrend, and that we could see a reversal. Of course, all of the markets, intermarket analysis must show the same direction. And by the way, what we are seeing here on the S&P 500, if you firstly look at the seasonal charts, keep in mind that February was a top month, and then we could continue lower into correction. So looking at the S&P 500, well, you know that we are still tracking this ending diagonal, and ending diagonal, of course, it's a very dangerous pattern. It can cause a very strong reversal in price, but of course it can be very tricky because there are plenty of overlaps, and it's not always easy to recognize where exactly and when the market will top out. But what is very important is that longer we stay in this unclear wedge pattern, I would say, more aggressive can be the later sell-off, right? So I'm very careful here. Of course, we can easily still retest 7K once again before market may move into this support zone or possibly even lower. But of course, if stocks would turn lower, that's what could trigger dollar strength. Okay, let's not forget that cryptos are still in downtrend, that metals also stepped into a downtrend. So somewhere all of this cash must go somewhere, right? So maybe this is going to be the US dollar. But if you look closely here on the 4-hour time frame of the S&P 500, well, it's still a bit tricky situation. We are tracking this to be a wave 4, unless wave 4 has already bottomed and maybe the whole wedge completed here. But because this whole price action is somehow neutral, that's why I'm saying that maybe there is still one more push higher that will occur, but we cannot rule out the potential retest of this swing support here around 6,700. So for the near term, let's say for the next week, 2 weeks, I must admit that price action, it's a little bit difficult here. But if we zoom out and look at this daily chart, then clearly it's, in my opinion, just a matter of time when we will see some higher degree correction. Also looking at German DAX, this one is also still in uptrend. Maybe this one is also going to attack one more high before possibly we are going to top out sometime this year. But looking at the price action here, I like how German DAX made only 3 waves down. We have seen that spike put wave C to a new swing low, then push to the upside towards this unfilled gap here from mid of January. You know how I look at gaps, they are always very important, and one especially when they are filled, and one reversal already occurred last week. And now if you will look closely, maybe zoom this in a little bit, you can see that that's a 3-wave decline, right? So if we can pass and see a daily close above 25k, then in my opinion there is a chance that we will, let me adjust the wave count here, that we will see a new push to the upside. So as long as we are trading here above 24,200, I think the German DAX has a room for more upside. But in such case, if I have to maybe choose between S&P 500 on German DAX, I think that German DAX has a much better looking wave structure here, while on the S&P 500 I would rather stay aside and let's see what happens there. Also, with members in our chat room, I usually share also those cash market charts with gaps, where I think that gaps are very important. Even if you look here, maybe at what that was mid of December, we have seen gap to the upside, then it was filled, market has seen a new rebound, and you will see that this kind of a situation, whenever gaps are big, they will be filled before market may once again find a new stabilization or reversal in the trends. And basically that was one gap, not that big here from January 21st. We have filled this one and then rebounded, and then there was another gap here, as you can see once again on February 6th. We have seen exactly into that area and we rebounded. And if you look here, we have quite a massive gap down there from December 17th. So let's see if market will try to press prices even lower in this week. Then maybe that's the next very important support level to watch for potential stabilization. But a lot obviously would depend on the US dollar itself as well. So earlier we discussed about dollar index. On the opposite side of dollar index, as you know, I'm paying very close attention and also sharing some ideas, trade ideas on euro dollar. And what we are seeing here is that since the beginning of this year, we have seen this very nice strong push out of this triangle, which usually is the case whenever markets are just keep moving sideways. A lot of traders will give up on a potential trades, either they are longs or shorts, whatever. But when finally market starts breaking out, especially when you see such a strong move like this, everyone will try to be part of this move. So usually they will join this trend too late, and that's why you're seeing then this market making the complete opposite reaction. And now if you look at this candlestick formation, I just still think that that's a pretty dangerous potential top right there above 1.2 level. Also, this looks like a doji formation, and now when the last few weeks market was not really progressing much to the upside, not even to the downside, I just think that this looks like a consolidation that could resolve to the downside. So in my opinion, as long we are trading below that high, there is still a chance that euro dollar will actually retest the lower side of this range, right? So if that was, because here is just very simple perspective. So if that was a push to the upside, very sharp move when a lot of traders were stepping late into this bull run, and now we have seen this top here, well, then market could possibly remain trapped in this range, and we will see move towards the lower side of the range. And I would say that 1.6 level is then very important for potential new support on the euro dollar. Even if you look here on this 4-hour time frame, same like with the dollar index, there is a chance for another push to the downside, especially now when the US yields are turning higher since last week's data. Keep in mind that even euro dollar, if this dollar would really try to catch the US yields that are moving to the downside, then of course even euro dollar could possibly see move towards 1.1950, maybe even 1.2 level, but that's a pretty strong resistance, and I would not be surprised if market will try to turn down from there. Also, if you take a look on cable here, as I have been warning a few weeks back, since market has seen this push to new highs here, we must be careful, because of course we cannot always say and be certain where exactly this wave 5 will top out, but whenever we see price reaching to a new high of a fifth wave, keep in mind that we could be in very late stages of this recovery. So what happened recently is that the market basically made very aggressive 5 waves down. So this tells me that pound is turning bearish, even if just temporary. Also, notice that that was a very nice rebound, and now we are selling off quite aggressively because of unemployment in the UK, which was reported just earlier today. It went up, so pound has dropped pretty aggressively here. We are now at the trend line support, so ideal scenario from an Elliott wave perspective would be that we see it still by the end of the week another retest of these higher resistance levels, let's say 1.37, maybe 1.3750, and then we see a sell-off. But if instead we see a daily close below this trendline support, then I think that wave B is finished, and that we should be aware of much more weakness later on, which I think will take this pair towards 1.3340. So after rallies, I think that there could be even opportunities to short this pair, while the market obviously is trading below 1.3870. I am bearish on pound. Also looking at Aussie, keep in mind that Aussie has been one of the strongest since the beginning of the year, right? We know that Bank in Australia, they also hiked rates because inflation went up, but now it's a bit unclear path what they may do next. Okay, in my opinion, there is still a chance that they will hike further, but at least this uncertainty could keep some temporary resistance in play for the Aussie dollar. That's one thing. The next thing is that we can count 5 waves up from that low. So as you know, we have been very bullish on Aussie for months when market was consolidating down here. But now when we have these 5 waves up, well, that's when we need to step back and just realize what may happen next, okay? Because the easiest prediction after such a consolidation is already behind. So now all what we know is that whenever you can spot 5 waves in one direction, well, you should be aware that market could make some pause. So that's the 5-wave movement that I'm talking about, and we have seen a pretty nice move into that area, and looks like that we are now in a new corrective phase. I think that if really this is the beginning of the higher degree correction, then you know that this pair can move even back to the area of a previous fourth wave, which is here around 0.69 level or so. Also, to me, it's very concerning when you have, as I said earlier, Aussie has been one of the strongest since all of these dollar pairs turned around back in mid of January. So Aussie back then was one of the strongest, but now if you look at this date from Wednesday, February 11th, which was last week, you can see that basically Aussie, NOK, these are one of the weakest. So to me, it's a bit concerning when you have this kind of a relationship going on from being the strongest now turning to being the weakest. I mean, it's not something that would wait a second. Maybe you would not call it that as important, but I think it is, because look what happened on Wednesday 11. That's exactly when the S&P 500 found this top, right? And that's exactly when we got the US jobs data. So since then, we can see that the S&P 500 is moving to the downside, despite inflation coming lower towards 2.4%. So market itself is telling me that it matters more what the labor data is telling us rather than inflation, because we are still far away from their inflation target. And if, as I said earlier, if jobs are strong, then it means that economy is in a good shape. So there is no reason to cut the rates further when you have still inflation at 2.4%. So because, I mean, inflation itself is already good for the economy, because people can afford to buy more, because a lot of stuffs are becoming cheaper. I mean, it's not really cheaper, it means that they're just prices going up a bit in a slower pace, actually. So that's for the S&P 500 versus all of those dollar pairs. Now, if we take a look on crude oil, as you know, crude oil is making a corrective setback. Keep in mind that market has made a very nice recovery since the beginning of the year, basically since end of December, but then we stopped at this important resistance from September 29 at $66. And what really matters the most is that that was a pretty strong and aggressive decline. Then we have seen this rally, and this rally, by the way, has stopped, you can see here, filled gap, exactly at this gap from Sunday, February 1st. So you can see almost on tick fill before market turns to the downside. And now when there are some talks between Iran and US, we can see that there could be some progress, and of course that's something that could define the trend for the next few sessions. And if you look at the Elliott wave principle, where it really looks like there is a chance that this wave C could extend a bit lower here towards $60 per barrel, maybe even 59 or 58.50 is something to watch for. So in my opinion, that's quite attractive level for potential new stabilization in, let's say, in a few days. So firstly, we have to see market to come into that area, and then I would be expecting some kind of a bounce. Now let's take a look on metals. So metals, as you know, after, so a very simple concept. If you have a very strong push to the upside, a very sharp phase to the downside, then the next phase is sideways, because usually that's what are three phases of the trend that we know. So either market moves to the upside, to the downside, or moving sideways. And now when we have seen these massive reversals and volatility here on metals not that long back, that's why I think that now it makes total sense for market to stabilize, because a lot of traders, investors are now looking at this market from a bit of the distance because they are not really sure what's going on. So back here it was very easily to read charts because everything was in uptrend, but when you have happening this, well, they are a bit confused. They don't know if that's a beginning of a new bearish trend or will be a new pause. So before all of those big players will start making any kind of new of decisions, I just think that that's how long this market could consolidate. But there is a chance that we will see a bit of more upside here on gold still. I think that very nice resistance remains around 5,100 all the way up to 5,300. So all of this, hold this zone, this yellow box is pretty important area in my opinion. That's where we could see some limited upside. Possibly that's even a wave B triangle if the prices will keep moving sideways here. Okay, so I should make it a bit better presentation here. So something like that. But keep in mind that that was an impulsive decline, so that's a counter trend movement. So don't fall into this bull trap. Keep in mind that if you are, of course, if you're more like a short-term trader, then just be careful up there. It doesn't mean that market must come aggressively to the downside, but if you're looking at some kind of a short setups and you're just recently made some new positions on the long side of gold, then definitely this should be area where maybe you should be aware of potential very strong resistance. I just think that when looking at gold, much more important and attractive levels could be anywhere between 4,000 all the way up to 4,400, and that was the zone of this fourth wave. Now let's take a look also on silver. So silver, as you know, has also seen a very sharp decline, but usually you will see a much more aggressive sell-off on silver metals in a corrective pose. And what we are seeing here is some stabilization, which we thought obviously will happen in that area. But notice that market somehow is struggling. So when I look back at the whole price action from the beginning of February 1st, 2nd, basically this, in my opinion, is still wave B. Now the only question is, what if wave B is maybe even a running triangle and we'll see another push to the downside? Or maybe wave B will be just having more ABC simple structure. So my primary wave count is still that these 90 levels or maybe even 100 could be retested, but that's then a very strong resistance from where I think we could expect a new turn to the downside. And the reason, as I said already last week, is because that on gold silver ratio you have 5 waves up, and now you can expect ABC down, and this wave C to the downside will unfold. Well, this could help silver to travel a bit more upside, and also could keep gold in consolidation with a potential retest of higher prices before eventually we see on both then another push to the downside into a higher degree correction. Also, maybe it's not a bad idea to look at some of the commodity indexes as well. Keep in mind that on some of commodity indexes we have seen some very strong move to the upside in the last few months, and this, as you know, has something to do with materials, and if gold itself will stay in this correction and continue to the downside, then of course this will also have an impact on these indexes as well. And if we have to make any kind of a wave structure here or wave prediction, then you can clearly see that on a lot of them we have only 3 waves rally from that April 2025 lows, and you exactly know what happened back then in April, right, when Trump announced all of these changes to to tariffs. So we have seen a pretty nice move to the upside, but unfortunately we have stopped at some very strong resistance. So if gold is really and silver will really stay in consolidation, or even see more weakness into that wave C of a higher degree wave 4, then it means that even those indexes, commodity indexes, could also do the same. And I certainly do not see this as a bullish wave counts, especially when on all of them you will check the price action from that 2022 highs. I would be much rather be turning bullish if we see and get that another wave C to the downside. Now let me check my list here. Okay, so single stocks. I will look at firstly at eBay, and the reason is because I think we have earnings, or no. Here it is. Of course we have. No. Wait. I was looking at some different calendar earlier. Here it says February 16 after the close, but here it says February 25. Anyway, eBay, I mean, all what I see here is some very textbook stuff when it comes to gaps. As you know, when I'm looking at stocks, not only on stocks but also other markets, I pay a lot of attention to open DAX, especially those that occurred after earnings. So firstly, we were paying a lot of attention to this gap from that occurred back in August of 2025. So we have seen a very nice reversal to the downside. We almost filled the gap before market recovered, and then once again we highlighted this gap as important resistance for a wave B rally. The gap that occurred in October of 2025, and we have seen a very strong sell-off. So now I think that we are once again coming into very attractive potential support zone down here, not only because of gaps but also because of the Elliott wave principle itself. So basically we have sharp move down for a wave A, counter trend movement for a wave B, and now looks like that we have 5 subwaves down in wave C right into this support area. So I think that that's quite attractive levels to watch. Of course, maybe it's not bad idea to wait on earnings first, but then if market would maybe, let's say, makes one more slight gap to the downside after earnings and you will see one unfilled gap higher, of course it would be quite attractive to look for potential stabilization on this stock and expect a rebound. Of course, this stock and a lot of other stocks I will be updating, as I said earlier, in our US single stock series. Now here's also Berkshire Hathaway. This one keeps consolidating. I think that we have some very nice and beautiful price action. Notice that this one has a very big gap from those earnings that were released back in May of 2025, so right around the highs. So this definitely looks quite attractive zone that could come into play still sometime this year, ideally after ABCDE triangle. So if we really are in ABCDE triangle, then you are now in a final leg with nice support around 480 or so. Maybe 490 could be the first level to watch. What if this lower trend line finally will suddenly, not finally, give way, then watch out for the second support around 440. So these are the two levels to watch: 480, 490, and then you have 440 if this trend line will be broken. But overall, I just think that we are in a wave 4 here. Not really finished yet, but this stock could still be quite attractive in my opinion this year. But you better chase it at the support levels rather than at the resistance levels that we are currently retesting. Now let's take a look also. My list says Meta. By the way, guys, please don't forget to press a like and make sure to subscribe to our channel as well here on YouTube. Now here's also Meta. This one also made a very nice, beautiful reversal to the downside from the upper side of the range after that gap, after market retrace into that gap area from October 30. Now we are selling off, and let's see what happens down there. I think that it could be quite interesting support around 620, so same trend line that must hold. If suddenly you see a daily, or maybe let's say 2 daily closes in a row below this trend line, then I think that we should be prepared on even more complex hard degree wave 4, and likely wave C would then target the second supports here around 540. So I still think that based on the wave structure and timing, that we could be approaching some very interesting levels for potential rebound, but it's yet to be discovered if the rebound obviously would be impulsive or just some kind of a temporary correction. Now let's take a look also on Tesla. So we covered Tesla already at the end of 2025 in December. We said that we can count 5 waves up and that we should be aware of some new consolidation, and so far you can see very nice 3 waves down right into that 370, 380, which is quite attractive, interesting support in my opinion. And maybe in the next few days, few weeks I would rather say, we could see price starting progressing higher into wave 5, but we cannot rule out the potential another retest of this 370 area, because if you look closely here, basically we haven't spiked here below that previous fourth wave. It doesn't mean that this must happen, but these kind of levels are very important, because usually that's where the stop losses will be placed. Okay, so this you can read it as a liquidation levels. So I think that if we move into that area, it could be even more powerful support for potential stronger rebound, rather than completely invalidate of the bullish look. Now that was for stocks. Now looking at cryptos, as you know, cryptos have seen a massive decline since October, and in my opinion they are still in downtrend. Of course, some of the coins will bottom earlier, some will do better than others, but keep in mind that the whole sector is still in a downtrend. Of course, we can be approaching some attractive levels, but that doesn't mean that we are having the structure that will complete the hard degree counter trend movement. Also keep in mind that if dollar this year would really stabilize and see any kind of a recovery into a hard degree correction, then of course this would most likely cause even more trouble to cryptocurrencies. Not to mention if they confirm that they will suddenly, let's say, be done with potential cuts. It doesn't mean that this must happen this month, next month, but maybe through the course of the year, if we will have any kind of evidences from the fact that they are on a pause. Of course, this is something that could once again define the next leg on cryptocurrencies, which, as I said, in my opinion, are still not completed the corrections here. Of course, there will be short covering rallies because of a lot of traders are forced to exit their positions, and that's when you can see some stabilization, especially after that massive sell-off that occurred at the beginning of February. We basically retested very nicely the lower side of this channel, so maybe now it's time for some consolidation. Watch out what will happen around 74k. It was very important level here back from March of 2024, new support in 2025, April Trump lows, and on a new retest this could be potentially next new resistance up here. So when looking or zooming out, I think that much more attractive and very strong support in my opinion could be around 50k for Bitcoin. Looking at the Ethereum, this one, interestingly, as you know, Bitcoin has retraced all the way back to these Trump lows here from April of 2025. but Ethereum is still lagging here. So in my opinion, there is still a chance that we'll see more weakness. Of course, some consolidation is something that we expect. We also shared some of the charts on the intraday basis for our members as well. So wave 4 here could get a bit higher, but still, if we get anywhere move closer to 2300, maybe 2600, that's the potential resistance area for the next sell-off. But down here, I think that's a very strong and very nice potential support for the next rebound that, in my opinion, could still occur, is going to occur this year. Looking at Ripple, now Ripple, as you know, is still in a very deep retracement here. It has plenty of overlaps, so we can say that that's a contratrend movement. But what we see here, if you zoom this in a little bit, that we have seen only a 3-wave rise. We successfully analyzed this market from intraday perspective for the last week or so, if not few weeks. We were looking for an ABC rally and notice that we failed at the upper line of this base channel. So that's usually very important lines where some of the fourth waves could find a new could basically resume the previous trend, especially when you have this perfectly matches with this swing low from October 10. So definitely that's a very important resistance area, and in my opinion there is a chance that we will see another retest of the lows. Keep in mind that $1 is a very important, very big level for Ripple, and a lot of investors, traders, as you know, have been paying attention to this number before this whole crypto bull run occurred. Back in beginning of 2025, in the first half of 2025. So now on the flip side, of course, this could be once again very important potential support. Also keep in mind that so far Ripple here already would then, if we go back to $1, would already seen a pullback of 70%, right? So we will then soon move into this phase when we can say it's extreme pessimism, extreme sentiment, when there will be a lot of traders, investors that will try and be looking to force to sell their coins, Ripples. Unfortunately, most of them in a loss, and that's when we could expect some kind of a stabilization, in my opinion, and then potential rebound. So I'm thinking that this $1 is a pretty strong and interesting support. But looking at the Bitcoin Cash, for example, this one has a bit different wave structure. We were successfully looking for this very nice support. We were looking for a spike into wave C towards 440, and now you can see a very nice, beautiful rebound. It doesn't mean that we will see a straight push to the upside, because if other coins will see more weakness or consolidation, even this one still could stay sideways a bit here. But as long as we are still holding 424, there is a chance that we will either consolidate or even try to retest slightly higher resistance levels. But I think overall that this one could be quite attractive and interesting, and could be looking for much higher levels this year. But as always, you better chase the markets at a support rather than some kind in the middle of the range or at closer to a resistance. Traders, I hope that you enjoyed this webinar. Make sure, as I said earlier, to subscribe to our channel, to press a like. Don't forget to visit us at wavetraders.com. That's our members area. We cover FX, crypto, and, as I said, US single stocks. I will make sure to update some of those stocks again in the mid of this week, so I will notify our members. And as I said, if you're interested, make sure to check this out, and you can also apply for a trial. Traders, good luck this week, and talk to you soon. Bye.